Yeah, hello and welcome to another update video about FET. The price dipped obviously yesterday in the orange support region, and as I mentioned before, as long as we're holding $1.28, there isn't really anything bearish on this chart. Days like these scare traders and investors usually, but it's often the red candle days that lead to a completion of the correction. At the moment, we have a WXY structure on the chart in my interpretation, and the Y wave is an ABC structure. The Y wave itself can unfold as a WXY, right? But for now, I'm looking at an ABC because it's normally the most probable scenario. And this C wave might get one more low. Now, what I often say is on days like these, on liquidity event days like these, sometimes the last 4-5 pattern is hidden in the red candle. That happens a lot in crypto because during rapid sell-offs like the ones we had yesterday, sometimes the market just hasn't got the time to develop a clean 4-5 pattern, but the depth of the sell-off is then often enough to complete the correction and scare a lot of people out. And that's sort of something that can always happen, which is why I work a lot with resistance levels. Also bear in mind that within a WXY pattern in the Y wave, we could already have a WXY structure itself, which could have completed here. Therefore, I'm giving out the resistance area, micro resistance. If this really is a C wave, and if we get one more low, then it should happen before the price breaks above $2.31, because a break above $2.31, which represents the 50% retracement level of the move down in what is the third wave, well, the fourth wave shouldn't really break above that level, right? So we don't want a fourth wave exceed the 50% retracement. Therefore, I'm looking for one more low as long as we stay below that level. A break above that level will step by step make it more probable that a low has already formed. And then when do we get certainty? Well, never. Yeah, that's what it is. There is never certainty in these markets, but it's all a matter of how much assurance do you need as a trader. A lot of people just add in the support regions. That's what they are for. They are nice and colorful. Others wait for maybe the first 1-2 setup, which means the first 5-wave move up, a break above resistance, followed by a 3-wave pullback to add. And then, others buy the breakout, like here, the B wave top, that would be a break above $2.85. Usually we say a break above a B wave is a good indication that a low has formed. But obviously reward to risk is not as good there anymore. So it's always the balance between reward and risk. Or do you take a mixed approach? You add in the support region and then you buy, with your remaining position, the breakout. There is no perfect answer to this because it is not only dictated by the chart, but also by your own psychology, risk profile, and so on. But yeah, all I want to share with you is, one more low is still likely, and it could reach $1.58 if there is one. But please be aware that the low could already be in because we now reached the support region, and because, at the moment we're still below resistance, but we already see a bit of a rebound today. So if we see a break above resistance, the low is likely in. And then we have to watch the next resistances at $2.75. That's basically the next level of confirmation that a low has formed, followed by a break above the B wave top at $2.85. And then the breakout will be at $3.47. But then the thing is, if you wait all the way up there to the breakout, there are enough instances where breakouts fail and might come down a bit again and then rallies. And yeah, that's why pullback trading is probably the best way to deal with these things. And then nothing has changed on the chart really, other than micro count adjustments, but the support area hasn't changed. And the next move up is still expected to get to $4.72, which is the 1.38 extension, or maybe even $6.31, which is the 1.5 extension. Now we can also try to calculate additional areas, because there are different ways of calculating targets. We can also take the length of waves 1 to 3 together. We go to the low of the wave 4, and then we're looking for the 61.8 extension level and possibly the 38.2 extension. But that is resistance, but not really a target. It would be too shallow for a fifth wave really. But the next move up then could take us also to 572. It's another level to watch. So nothing's really changed. Move down looks still corrective. Yep, sharp sell-off yesterday, but ideally we're finding support before the price breaks below 128. As I often say, anything here is really just noise, and we have to give the market that space, which is why these support areas are there on the chart. And you can't really define them, any narrower, because as you can see from yesterday's sell-off, the market needs that space. And at the moment, I cannot rule out one more low. That's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.